There's a huge fight going on in traditional finance with the asset managers like Fidelity and Blackrock on the one side and the SEC on the other side. The SEC didn't just approve the spot Bitcoin ETF applications. It asked for more information which are specifically related to the surveillance sharing agreement. And so we first got the rejection of Fidelity's Bitcoin spot ETF, and now Fidelity is refiling again for that ETF. And so we've got a massive document of almost 200 pages, all kinds of charts, a lot of text. And so I haven't read through this, but there is actually a way to get hold of those kinds of complex documents and pull out the most important details without spending hours and hours of labor. And so the solution to our problem is artificial intelligence. I present to you chatpdf.com. You can upload a PDF over here and then you can chat with that PDF. And so I tried to find out, what is this surveillance sharing agreement all about? Who's in that agreement? What is it for? And what is Fidelity doing in order to address the SEC's concerns? And so I simply just asked it. And it's interesting, in the refiling of that application, it's actually not talking about the prior applications. It's not directly addressing the lack of clarity, but it is now talking quite a bit about this surveillance sharing agreement. And so feel free to read through these answers yourself. But here's a quick summary of what the agreement is all about. The surveillance sharing agreement is an agreement between parties that allows the sharing of information about market trading activity, clearing activity, and customer identity. The parties to the agreement should have reasonable ability to obtain access to and produce requested information. The agreement is important for detecting, investigating, and deterring fraud, market manipulation, and violations of exchange rules and federal securities laws and rules. And so, who's sharing here information with whom? It's on this website, again, extracted from this chat conversation. isgportal.org, Intermarket Surveillance Group with 68 active members. Basically the who is who of international stock markets. There's a separate Excel sheet to be downloaded on that website with all of those names. So those exchanges are sharing who is doing what kind of trades. Probably to detect things such as wash trading, artificial manipulation of prices. And interestingly enough, these are not details related to the custody of that ETF. So the custody of the spot Bitcoin that's behind the ETF, that's backing the ETF. And so this somewhat explains why this initial request for additional information wasn't that bad for the markets. The Bitcoin price went down by 3% when those news came out, but it recovered somewhat. Only half of that drop is still prevailing. And Fidelity seems to be optimistic that these problems can get resolved. Otherwise, they wouldn't have refiled again. So it looks like all lights are green. The path might take longer than initially thought, but there's simply so much capital behind this. And the SEC probably cannot withstand all of that pressure against BlackRock, Fidelity, Deutsche Bank, etc. So one day, this domino is likely going to fall and a Bitcoin spot ETF, not just a futures ETF, will get approval. Which then in the end means that whoever buys that ETF is indirectly buying the Bitcoin at the exchanges as well. Right? With futures ETFs, you're simply just betting against the issuer on the price development of the Bitcoin. Nobody needs to hold the Bitcoin. But with a spot ETF, the issuer actually has to back the ETFs with the asset itself. We keep monitoring the situation in Telegram, so feel free to join us. It's Bitcoin Strategy Channel. Simply search for this within the Telegram app, or alternatively, click the link down below. Looking forward to chatting with you. Bye-bye.